Hey there, Dustin Owen, Waterstone Mortgage Regional Vice President. Along with me is my lead loan officer, Kevin Murphy.
In this video, we're going to be discussing the 5 most basic types of residential financing. The first type of financing we're going to discuss is conventional. And conventional is going to have a maximum loan amount of $484,350.
And this is assuming that you're not buying a home in a high-cost area. High-cost areas like Manhattan, San Francisco, or even parts of Miami. This $484,350 also is for a one-unit property. If you're buying a duplex, a triplex, or a quadruplex, the maximum loan size will actually be higher.
And that jumps into our next point, which is we do conventional 1 to 4 units.
So anytime you're doing residential financing, 1 to 4 unit is what makes something residential. If something has more than 4 units, it's no longer residential, it's now deemed commercial.
Minimum credit score for a conventional loan, 620.
And this is set by Fannie Mae and Freddie Mac. This is not specific to any bank or any lender, meaning no matter where a consumer goes to obtain a conventional loan, 620 is going to be the minimum credit score.
Different types of purchases. You can do a primary home purchase or owner-occupied, second home purchase, and investment purchases.
And this is good to know because some of the loan products we're going to cover a little bit later in this video, you'll notice, do not allow for second homes nor investment properties. Conventional, all 3 property types are allowed.
Different types of loan terms, so the most basic being your 30-year, 20-year, 15-year, and then adjustable rates or ARMs.
And then finally, just understand that on a conventional loan, the down payment is going to vary. If you're buying a primary home that you're owner-occupied and you're utilizing down payment assistance, there are ways for you to utilize conventional financing with no money down. But if you're trying to buy a quadruplex investment property, you may need as much as 25 to 30% down.
The next type of financing we're going to discuss is FHA financing, and it's really limited to primary homes only.
Now, just because it's your primary home doesn't mean that it can't be a 2, 3, or 4 unit property. FHA allows us to finance condos, townhomes, single family, duplex, triplex, quadruplex. You just, as the consumer, have to live in the home as your primary, or if it's a multi-unit, you have to live in one of the units as your primary.
FHA is not going to be just for first-time home buyers.
That's probably one of the biggest myths that is out there regarding FHA. Now, it's great for first-time home buyers, and it's great because it's one of the more lenient when it comes to credit qualifying. FHA allows for lower credit scores. They also allow for more credit blemishes as compared to conventional, and sometimes they allow for a slightly higher debt-to-income ratio.
6% is what the seller is allowed to contribute back to you.
So that would be a closing cost credit to the seller. Now, we didn't dive into this on conventional, and the reason why is that on conventional financing, it's not as cut and dry as it is with FHA. On conventional financing, the seller contribution towards closing costs can range anywhere between 2% and 9%. On FHA, it's set 6% of the purchase price can be given back to the buyer as a credit towards closing costs.
The maximum loan amount on an FHA is going to actually be $314,827.
So this is the maximum loan amount. Your purchase price can obviously be any dollar amount higher once you add in the down payment. Also, please know that on the FHA max loan limit, this is what it is for here in Central Florida. This will change based on market, service area, or geographic location.
You're going to be able to put 3.5% down.
That is the minimum down payment on an FHA loan. This is assuming that we're not utilizing any type of down payment assistance program that could help eliminate that 3.5, maybe down to 1.5 or 0.
Your minimum credit score is going to be a 585 in order to qualify.
And 585 is what we do here at Waterstone in-house. There are actually ways to finance FHA loans even lower, but the likelihood of it actually closing, slim to none.
Finally, terms again, we generally on average would be 30, 15, and ARM are your most common.
Correct. That's a 30-year fixed mortgage, a 15-year fixed mortgage, or an adjustable rate mortgage.
The next type of financing we're going to discuss is VA financing. And then with VA financing, it is going to be a primary home purchase only.
Just like with FHA, and in the next segment we're going to cover USDA, VA ends with an A. If the loan product ends with an A, know that it's for primary homes only, meaning your buyer is going to need to move into this home within 60 days of buying the home and live in it as their primary residence.
You're going to have to be an eligible veteran in order to purchase.
This means that if it was your buyer's father or uncle or brother who is the veteran, they will not be eligible to utilize VA financing. You must be a qualified eligible veteran, or in some cases, the spouse of a deceased qualified eligible veteran in order to obtain a home loan through the VA.
VA loans require no down payment.
No down payment does not mean no closing costs. Now, we can do a loan for any qualified veteran with no lender fees, but they're still going to have their third-party fees, things like the appraisal, the title company's charges, the government's charges, their real estate taxes, and their homeowner's insurance.
Seller credit, there's not really an assigned value, it just has to be reasonable.
And this is a big misconception in the market. Many lenders will tell you the maximum seller contribution is 4%. That's actually the maximum concession, 4%. An example of a concession would be, hey Kevin, if you buy my house, I'm going to leave you my 1984 Honda Accord, because that Honda Accord has a value of less than 4% of the purchase price. But when it comes to closing costs, the VA only requires that the seller credit is reasonable for our market.
The maximum loan amount on a VA loan is going to be $484,350.
So if you notice, this is mirroring what conventional states their maximum loan size is. But this maximum loan size is what is the maximum for 100% financing. If a veteran is looking to put money down, let's say they want to buy $1 million property, they can still utilize their VA benefits, but instead of doing 0% down, they're going to be somewhere around 11% down on that $1 million property.
Loan terms, again, the most common are going to be 30-year, 15-year, and then the adjustable rate or ARM.
Yep, and these 30 and 15, obviously those are fixed rate mortgages. And then lastly, here at Waterstone, our minimum FICO score or credit score is a 600. There are different outlets that may say they can go below that. However, in our experience, we haven't found many that actually close.
The next type of financing we're going to discuss is USDA financing. First off, you should know that USDA financing is going to be geographically restrictive.
By geographically restrictive, we mean rural. A USDA loan is a rural housing loan. So any property types that we are financing typically don't sit in metro areas. They're going to be in the outskirts. And know that we have a tool at our disposal where we can go online, input any property address, and run that property address through a database to see if that property is USDA eligible.
There are income restrictions with a USDA loan as well.
So USDA is going to require that household incomes don't exceed a certain threshold, just like they're going to require that a buyer's assets don't exceed a certain threshold.
This is again for a primary home only.
Like we discussed in the last segment, USDA ends with an A. If it's VA, FHA, USDA, it's a government loan and it's used to purchase primary homes only.
USDA, another great thing, no money down.
No money down is fantastic. This is the reason why someone looks at a USDA loan.
You are able actually to, in certain situations, finance your closing costs into it.
So this is unlike FHA, VA, or conventional, where if you're getting some kind of a closing cost assistance as a buyer, you're typically getting a credit from your lender, a credit from the seller. In certain cases, your lender may be able to increase your interest rate in order to cover some of your closing costs, but never on those types of loans can you actually finance in the cost of the closing costs. However, on USDA, as long as the home appraises for more than the purchase price, then the home buyer can technically finance in their closing costs.
USDA, minimum credit score on it is going to be a 600.
Again, that's what we feel comfortable doing here at Waterstone Mortgage. This is what we've had success with. There may be other lenders that say they can do it lower than 600. We've just never experienced that on our end.
And last and finally not least, seller is allowed to contribute up to 6% back for closing costs.
So let's say the home appraises for purchase price but not over purchase price, and your buyer's short funds to close. The seller can contribute towards their closing costs. And lastly, one other aspect of USDA that you should know, it's not just for single family homes. We can do condos as well as townhomes when you're looking at USDA loans.
The last type of financing we're going to discuss are our non-conforming loans.
And non-conforming is a very small bucket filled with tons of loan products. They're called non-conforming because they don't fit in the box of either conventional, FHA, VA, or USDA, hence the term non-conforming.
First is a jumbo loan, and a jumbo loan is any loan that exceeds the conventional maximum loan limit.
Correct. So we learned earlier that the maximum conventional loan limit is right around $484,350. A jumbo loan is going to be a loan amount that exceeds that, typically used for the $500,000 to $1 million plus purchase price homes.
Next is a doctor loan.
So doctor loan is a non-conforming loan that we offer here at Waterstone, and I know several of our competitors do as well. And what a doctor loan does is it allows the home buyer, who is either a physician or possibly a dentist or a veterinarian, purchase a home with as little as no money down up to a $750,000 loan amount without the need of paying monthly mortgage insurance.
Next, we have a wealth builder loan.
Wealth builder is something unique we have here at Waterstone. It's a 20-year loan. It's 100% financing. It has no monthly mortgage insurance, and the credit score on it is 680. That loan product does not fit into the box of Fannie, Freddie, FHA, VA, therefore it's non-conforming.
We do also offer a bank portfolio products.
Bank portfolio is just that. That's where a client doesn't fit in the box set forth by the conventional loans, and they come to a lender like Waterstone and give us their information, and the bank that owns Waterstone will make a determination whether or not they will allow financing outside of what is required by Fannie, Freddie, FHA, VA, or USDA.
And the neat thing about this is a way that we can get moving quicker on somebody that's had maybe a bankruptcy or foreclosure.
Yes.
Finally, bank statement loans.
So bank statement loans are one of the newer types of non-conforming loans, or we call them non-QM loans that are hitting the street. This is where typically a self-employed buyer has an inability to document their income, but by sourcing their deposits utilizing 12 to 24 months of bank statements, we can calculate an income and use that income to qualify. Because this is not allowed by conventional FHA, VA, or USDA, it makes it a non-conforming loan.
This concludes our training video on loan programs. Please reach out to me with any other additional questions.